right, so here we go. This is going to be your chapter 21 in your government. And again, you guys can just follow along, take notes as you would normally take notes, and then when and if we have tests, you guys can use your notes to be able to hopefully help you guys out in being able to hopefully do well on these tests, even though they're going to be open note. Hopefully I'll be able to explain stuff well enough. Here you go, chapter 21, dealing with taxes. This is how the government does raise money. Obviously they can raise money through trade deals, but man, taxes seem to be the biggest way that they're going to raise money. And perhaps the biggest means by which they get money is from our money, from our income taxes. And when you think about the income taxes itself, it's based on the 16th Amendment. And the 16th Amendment, we've talked about this before, was the inevitable, two things are inevitable in life, the death and taxes, but the 16th Amendment is what they have passed to allow Congress to levy taxes on us. And it's based on a system called a progressive tax. Now, as far as a progressive tax, as we've talked about before, this is the more you make, the more the government takes from you. So LeBron James will be taxed at a higher rate than, say, your local Christian school teacher. So again, they put a little bit more tax burden, actually a lot more tax burden on the wealthy, but that's a progressive tax. And that was an idea that went all the way back to about the 1920s with a guy named Bob LaFollette and the Wisconsin idea. Perhaps you're remembering this from government, but perhaps not. There are certain things that you can do to kind of lower your income tax bracket. They have exemptions by which you can basically think of it like this. If you make $50,000, if you do certain things, you can put your tax bracket a little bit lower. Meaning you can put it down to, let's say you donate $5,000. All that means is that instead of paying taxes on $50,000, you pay taxes on $45,000. And some of those exemptions would be dependents. You guys are dependents. You guys are dependent on your parents, and your parents can claim you as taxes, and you can get child tax credits. That's a big deal. There's a certain age by which you cannot be a dependent anymore. And most of you guys won't hit that for a while. It's in your 20s. And if you're still going to college, you could still be claimed as a dependent. But you can't be a 30-year-old living in your mom's basement playing video games and picking your nose and mouth breathing and still be considered a dependent. But that does lower your tax bracket. You can also donate money. We have a lot of times that people do this for the school auction. And when they do stuff for the school auction, they donate money, and then we send them a form that says how much they donated, and then that takes their tax bracket down. So let's say you make $100,000 and you buy $2,000 worth of goods at an auction. That is tax deductible. It's considered a donation. Now, there are certain qualifications that you have to have for that, such as being able to prove that you've done that. So that's why we got to send you the paperwork. But there's something called itemized deductions that you would have to fill out. Now, if those itemized deductions, if they are able to mount up to a certain amount, then it's worth you doing that. Otherwise, they give you what they call a standard deduction. State and local taxes, you do not have to pay income taxes twice on those. So whatever you pay there, you pay. You're not being taxed twice. Your interest on your mortgage, they take that also from your taxes. So depending on how much interest you're paying, they don't charge you on that as well because you're already paying them. The term that we use here is taxable income. So let's say that you make $60,000 a year, and then you donate $5,000, and you have a couple dependents. Once that number is completely run, they give you what they call a taxable income number. So if you made $60,000 and you donated $5,000, your taxable income would be $55,000, and that's what they would base your taxes on. And again, it's a progressive tax, so the more you make, the more the government would take. Your taxes are due on April 15th. It is possible for you to be able to get an extension on your taxes. That's not that big of a deal. It's not too uncommon for people to do that. Extensions can last about another month, maybe longer, depending on the circumstances. I wonder during this pandemic if they're going to extend those as well. But your taxes are due on April the 15th. They just need to be postmarked by that point in time. Why might you get an extension? Well, it could be because you're not ready to file. Maybe you messed up and maybe you just forgot. But they allow you to do that. Now, that said, if you don't give that money to the government, they will come after you via an audit. Your employer is going to send you a W-2 form and possibly other forms that you might get for your 401k, which is your retirement plan. And your government would send you, or your employer would send you these forms. They have to mail them out by January 31st. This is what a form looks like. The form would look like this. It would have your name on it, right where Jane Doe's name on it. It would have the employer's. It would have your social security number at the top. It would say how much wages and compensation you got. And if you notice in the box number 2, it says federal income tax withheld. That's what you would pay for a year in income tax based on this. This is back in 2014. And then Social Security tax withheld, that goes into your Social Security account, and then the Medicare, say, $725, same type of thing. All of these numbers, your accountant or you yourself, when you do your taxes, mean something, and you would have to use this to actually fill out your taxes. And this is pretty standard. Everybody's pretty much looks very similar to this. And you would give your money to the IRS, which stands for the Internal Revenue Service. That's where you would send in your payment. That's where you would send in your taxes, and they would pay, and you would pay out. Now, if you've paid too much, like let's say your federal income tax withheld, you paid a lot more, then you would get some of that money back. So, for example, I know some of you guys work at different jobs right now. You probably do not make enough, so the taxes that they withhold from you, they're going to give you that money back. And so let's say that you're a punk kid and you work at the movie theater. You might get, I don't know, $3,000 this year, and you might have paid $700 in taxes. They will give you that money back on your tax return. Is it possible for you not to get a tax return? It is, especially if you do not, if you make a lot of money and you did not give the government enough money throughout the year. That would be a reason why you would actually pay taxes to the government. But again, this form, they would have to mail it out by January 31st, so most of you guys, if you already have a working job, would probably do that. Now, some of you are thinking, well, I babysit. Do I get this? No, probably not, unless you are working for like a daycare, which would be a lot different. But if this is just babysitting, then you probably wouldn't have any type of W-2. Now, again, depending on maybe your parents an accountant and says you have to pay taxes on that, but more than likely you do not make enough money for the government to even care. There's X amount of dollars that you have to make in order for the government to want to charge you taxes for that. All right, moving on. And let me see here. This is... All right, sorry for that delay. Let's talk about corporate taxes. This is money you make above the normal cost of doing business. We've talked about some of your parents have businesses themselves, and when they're talking about the money you make above the normal cost of doing business, it would be this. Maddie's dad is a painter, and he has X amount of dollars that he can spend, or that he has to spend for paint rollers and brushes and paint. Once all of that is paid for, then what they do is they see what he profited, and that's what they would tax him on. But he would be able to write off paint brushes, he would be able to write off paint supplies, sometimes even gas money can be used of that. And then again, donations help lessen taxes. This is why some organizations actually give money to kids' little league teams, and you'll see why we have sponsorships down in the gym, because that corporation wants to spend less or make less money. And when they make less money, because it's a progressive tax, it means they don't have to be taxed as much. Nonprofit organizations are exempt from taxes. So schools, we as a school do not pay taxes. Churches do not pay taxes. And you have to actually get a non-exempt, like a tax-exempt form. Some of you guys that have been class officers have probably used our tax-exempt form, so you don't have to pay taxes on some of the stuff that you purchase for the school. Social insurance tax. And with a social insurance tax, this is money to help society, help those who are around. Everyone is eventually, in theory, would benefit from this. This pays for Social Security, Medicare, and Medicaid. We've talked about Medicare and Medicaid, how it both works for the elderly, but also for those who do not make as much money. And as you looked at that previous W-2, you would look at that and say, well, that shows me what I make. Yep, and it goes into a big fund. Sorry, I jumped ahead here. But each pay period that you get, X amount of dollars gets taken out of your paycheck and goes to these social insurance taxes to help people in society. Now, in theory, it should help you, but they kind of use this as a fund if you're not using it. They kind of almost operate as like a bank, and they bank your money. At the end of each year, when you paid into Social Security, they'll actually send you a form telling you how much you paid in Social Security, and if you were to retire or have to dip into your Social Security, what you would have per month. So a lot of your grandparents are using this right now, but all of you guys, if you have a job that has taxes being taken out, again, babysitting doesn't apply here, all of you guys who have taxes taken out are paying into these things. Excise taxes. This is a tax on the production, distribution, transportation, selling, and consuming of goods and services. This could be used for guns. This could be used for alcohol. This could be used for oil. And this is just an additional tax that they actually put in there. Sometimes you'll see it listed as like a government fee, but that's an excise tax. Talking about buying gas, oil changes, alcohol, firearms, telephone, and it's just an added tax on that. It's not. It's something that would be above and beyond the normal 6% sales tax in Michigan. All right, well, that takes care of this first lecture or lesson. And if you have any questions, let me know. And we'll post another one here soon and keep us going. This chapter is pretty short, so it shouldn't be too bad.